We are here in downtown Soho, joined by a very special guest this morning. Paul Tudor Jones is here. He's the founder and chief investment officer of Tudor Investment Corporation. Of course, he is also the founder of the Robinhood Foundation, which is hosting its annual investor conference in partnership with J.P. Morgan right here. That's going to begin tomorrow, and we're thrilled to have you on the program.
So good to see you again.
So good to see you. We got to talk about a lot of things because we are now 14 days away from the election, and I think everyone is trying to make sense of this market and where things are headed and where things are going, and maybe, depending on who you think is going to win the presidency, how that's going to impact this. So where are we?
Well, for me and in the hedge fund world, this is kind of the macro Super Bowl coming up on November 5th. And I think this one, some elections are not that binary. This one is binary, not so much because of which candidate wins, but it's binary in the sense that what is the market's response going to be to either candidate if they win? And so we can either continue down the path we've been on, which I'm going to kind of frame here in a second, or we may have that point of recognition where all of a sudden the markets have different ideas than what the candidates have been espousing. So
before you lay out where you think that piece of it is, let me just ask you this. So Stan Druckenmiller said that he's convinced by market indicators right now that Trump will win. And I'm curious if you agree with that thesis. Part of it is that he's looking at, Polymarket and the betting markets. Part of it is he's looking at the shares of DGT. Part of it he's looking at Bitcoin.
Mm-hmm. Yeah, certainly the markets are saying he's going to win. I think they're heavily skewed by Republicans, so I don't know if I necessarily believe the betting markets, but I don't have any great insights. I really don't. I just would be more skeptical of them than I would normally. It's the same way, look, in football betting, right? You can get a huge home bias where the line doesn't reflect reality. So, yeah, I know what they're saying, and I respect them.
But what about other investors? Dan Loeb recently came out with a report to his investors saying that he's positioning or repositioning his portfolio around the thesis that former President Trump will become the president.
And I have also, if I'm being honest, primarily because I see the polling numbers have clearly moved in this direction.
You say also, meaning you've repositioned as if former President Trump wins.
Yes.
You have.
I've moved in that direction for sure.
And what does that mean?
It just means more inflation trades, which I'd love to get to, but right. I think it's really important that we frame where we are right now, and where we are is an incredible moment in U.S. history. And what I really want to talk about is the debt trajectory that we're on. So we've gone in the space of 25 short years from debt to GDP at the federal level from about 40% to almost 100%. 60% in 25 years. And if you look at what our trajectory, what CBO projects our trajectory to be, as well as what we see as and we're going to project further than the CBO. So I'm going to show you a chart. This is debt to GDP. So CBO says that we go from 98 to 122, I think 124. That's very conservative over the next 10 years. If you extrapolate that 30 years, you get to 200% debt to GDP. And so that's something, obviously something that can't go on forever, won't. And the question is, after this election, will there be some point of recognition, particularly with all the tax cuts that are being promised by both sides and the spending plans? I mean, they're handing out tax cuts like they're Mardi Gras beads, right? We're doing tax cuts on everything from tips to toucans. So it's crazy what's being promised. After the election, I think the fact that you've got 7 to 8% budget deficits as far as the eye can see, the question is, will the markets allow either candidate? I think under Trump, the deficit goes up by $500 billion per year. Under Harris's plan, it goes up by an additional $600 billion plan per year. I have a feeling all those are just pipe dreams. I think the chances of any of those being enacted are...
You mean that the tax cuts that they're putting on the table during the campaign?
Those have zero chance of being enacted in my mind. I think the markets will, the debt markets for sure. The Treasury market won't tolerate it. So
why do you think that the Treasury market continues to tolerate it now?
Well, you know, it's so funny because financial crises percolate for years, but they blow up in weeks. That's kind of the history of them, right? And so for me, this election becomes one of those seminal points where all of a sudden, let me really think whether this proposition that the U.S. government is making me is something that I actually want to participate in. And I just want to, try to frame in layman's terms. Let's assume that I'm making $100,000 a year. You've lent me, because we're such great friends, $700,000. Mm-hmm. That's what you've lent me. And I come to you and say, okay, Andrew, I'm going to pay all that back to you in 30 years. But between now and when I ultimately pay you back, I want to borrow $40,000 every year for the next 30 years. And then at the end of 30 years, I'm going to pay the whole thing back. Would you lend me that money?
Unlikely.
You son of a bitch.
Right.
I thought you were my friend.
Well, this is the problem that we have.
Okay, so that's actually the proposition that the U.S. government makes to every bondholder today. That's the exact same proposition. So think about this. We owe $35 trillion. Our tax take is $5 trillion. So we owe 7 times what our tax take will be this year. Our revenues will be this year. And our deficit is $2 trillion, and it's $2 trillion right now as far as the eye can see. That is literally the proposition that the U.S. government is making to someone who buys a 30-year bond.
So I'm not disagreeing with you. The question is, life is relative, so some people would say, sure, you can either buy bonds from the U.S. or you could buy bonds from some other country that has an even worse situation.
Or you cannot buy bonds.
At all.
Right. So anyway, I was watching this Vince McMahon documentary, and in it, and I loved wrestling, particularly when Stone Cold and The Rock and all of them. So in it, there's a term that I'd never heard of called kayfabe. And in wrestling parlance, that represents the unspoken, unwritten, tacit agreement between the wrestlers and the fans about the illusion that's going on in the ring, the suspension of disbelief that what's going on in the ring is actually, we know it's scripted and we know it's a performance, but they ask us to think it's genuine and real.
And so that's what you think this is?
Yeah, we're in an economic kayfabe right now. And it's not just the United States. We're in it in the UK, in France, Greece, Italy, Japan being the biggest of all. It's this economic kayfabe. And the question is after this election, will we have a Minsky moment here in the United States in U.S. debt markets? Will we have a Minsky moment where all of a sudden there's a point of recognition that what's going to happen or what they're talking about is actually fiscally impossible, financially impossible?
So are you betting on a Minsky moment?
I am clearly not going to own any fixed income, and I'm going to be short the back end of fixed income because it's just completely the wrong price.